Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it has been a very whipsaw price action over the last 5-7 days, and with the market trading now back to the bearish sentiment as the US dollar, which measures the greenback strength against a basket of 6 major currencies, recaptures the 104 level and refreshes its 20-year high around 104.40, has sent some of the markets tumbling further. It all began on Wednesday as the global market displayed a volatile session after the US consumer inflation data still holds around its record annual gain of 8.5 posted in March. This the largest increase in more than 40 years. In the US Consumer Price Index, or the CPI, the annual pace of headline inflation fell to 8.3 in April from 8.5 in March, according to the highly anticipated US Bureau of Statistics data published on Wednesday, that is. Now, that was above expected decline to 8.1% year on year. However, the month-on-month headline inflation fell to 0.3 in April from 1.2 in March, above expectation and the drop or forecast of 0.2, with the core consumer price index, a measure of core inflation, also exceeded expectations. Looking at the technicals, though, the market is now trying to wear out this bullish divergence. And if we see a break of the level seen at 68.70, which is very much close to where we challenged today at 68.72, could expose further downside risk towards 66.50.90, where I've outlined here on the monthly chart. From the monthly chart, however, or the broader or primary sentiment or trend is negative. But as I mentioned, when we look at these time frames, we do need to see confirmation at the end of May. So we can see a lot of ranges in between them. But looking at the technicals, it does look somewhat heavy, and the bullish divergence is nearly crumbled. And if we see a break of 68.70, as I mentioned, gives us a move down to 68.20 and lower to around 66.50.90 as a measured move. Well, as I mentioned, the dollar index, which measures the greenback strength against a basket of 6 major currencies, has rallied and refreshed its 20-year highs. The euro has finally caved in and taken out the level of 104.85. From the break, now exposes the region of 103.40.60 as a measured move, where I've highlighted it here. Do note there is a trend when it comes to the dailies, as the ADX is strengthening to the bear case, and also with the RSI still remaining somewhat heavy. Keep an eye on this MACD because it has been a little bit lackluster. Nevertheless, I feel that if the dollar index maintains its momentum, this should see a further drive to the downside for the euro. Finally, some of us take our bearish hats off as the market is finally taking its toll on the support and is giving in. And from the break of around that 129.30.40 level, looks towards a 127 figure 45 as a measured move, or where I've outlined here. A plummeting RSI and also with the MACD married to the indicator does give further conviction that a further move should be to the southward way, and therefore look towards that base and then reassess from there. It is getting quite concerning that the sterling is still tumbling, and the fact is the market is now very much close to its next objective around 121.70.75. A break there would give further risk to the downside, and we would have to jump into the broader picture and give some assessment, as the fact is that 121.70 may give us a measured move down to this region, which is seen around 120.50.55, or levels that we saw back in the Brexit. Still, the market is extremely oversold, and let's see if we can see a rebound either from 121.70, or if the bears do continue to weigh and see the divergence, which is now only seen on the MACD, kick back in and rebound. But at the moment, it doesn't look like we're going to see that at the moment, as the trend has re-established and slightly stronger. Sterling Kiwi, very whipsawed overnight, rebounds off 193, reclaims the 195 and now holds there. In light of the pattern, I think there's a little bit more upside test to come through, may actually push up towards 195, 90.95, and then back towards 193, and still keeping an eye on that 191 level. Finally, wrapping up with gold and oil, for the market was very whipsawed. I'm still holding the bearish view, given the fact that this pattern with the RSI has not been able to sustain any renewed momentum. The fact is the market's still eyeing the level of 1,820.26. In the downtrend that's coming through here, we can easily draw a somewhat line here, and therefore could see a further test towards this bottom side, and that is reassess from 1,820 if reached. I feel any upside attempts should fail beyond 1,858. Wrapping up with oil. The call to the upside after rebounding off 97 was 104. We pretty much got there, and from the rejection is now starting to see a bit of a tumble. If this market continues, then we are looking back towards $97 a barrel, which I do feel that's in favour due to the topside rejection, and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out the intraday report, and I hope you enjoy the rest of the day.